What's up, Abby? How are you?
I'm good. How are you?
Good. We're living in chaos over here, and it's
We
it's
are.
it's it's all good. I know you wanted to chat on a few things, so I figured we just go on here and go live with it and kind of figure it out.
Yeah, I think it's the easiest way. We're gonna have a cool, casual conversation, and I'm going to uh, ask you some burning questions
All right,
that a
I'm a little
23-year-old
bit
girl.
nervous, but as long as it's not too technical, I think we'll get through this one. Okay.
Oh no, I think we're bringing it back to the basics,
Uh-oh. Okay.
and
Basics might be harder than anything else.
I know I'm gonna see what you still remember.
Gonna really test my knowledge here. All right, let's fire away. It's a good thing I have Google next to me. I can always cheat.
You got the monitor going. Okay, so Aaron, I've been working for 3 months, and I got a burning question. So honestly, what is insurance?
Oh, that's terrible. How could you hit me with something like that?
I'd say we're gonna bring it back to the basics.
Gosh, I don't even know what the formal definition of insurance is, right? So insurance is insurance is a guarantee. Insurance is a contract, right? So we sell insurance-based contracts where for a fee, right, you're giving something in exchange for protection in case a peril occurs and causes damage or loss to something of value, right? So we purchase auto insurance, one, because it's required by law to purchase auto insurance. Two, we want to make sure if our car is damaged that it gets replaced. Three, if we get into an accident and it's our fault that we get sued, that we have coverage to protect us. So home, auto, business, jewelry, art, boats, cars, motorcycles, businesses, right? Professional liability. There's so many different lines and types of insurance that we sell. But at the end of the day, bringing it to the basics, we want to make sure that, insurance is a product that we sell through different contracts to protect the assets that you want to have protected or are required by contract or law to protect.
Okay,
I think I
cool.
answered the question.
Yeah, I think you did. I
That
think
was
you
a
did.
tough one.
So it's basically like a preventative method. You get it for good, better, or worse. And when you need it, it's there and it'll save you a lot of cash at the end of the day.
Yeah, I mean, you need it, and you want to make sure that you have it, right? It's an expense. For a business, it's a line item on your expense and in your P&L. And in your personal life, it's also cost of doing business for living, for driving, for owning anything of value and protecting yourself from crazy shit that might happen to you.
Okay. So another basic,
Go.
like you said, auto, you get into an accident, it's the other person's fault. Would your insurance go up too, or just theirs?
Right. So on an automobile policy, you have discounts, right? A lot of these insurance policies are set up based around discounts. One of them is a good driver discount, a clean driving discount, right? And so you can be a clean driver for 3 years, 5 years, or longer, depending on the insurance company and how it's rated. Clean driving means no incidents or accidents, um, whether it's your fault or not your fault. So if it's someone else's fault, you have property damage, you can get the property damage covered by their insurance sometimes. Oftentimes, it's better to put it on your own. At the end of the day, through motor vehicle, you may see a not at fault accident show up on your record, which will take that cleanliness off of your file. It's not going to be as harmful as an at fault accident would be, right? But it'll still be there, and it can still definitely affect your premium. And that's where we come in as professionals. Sometimes we want to go through the other party. Other times we're like, hey, put it through your own insurance. It's still going to show up as not a fault. If you need a rental car, if you need to get your car repaired quicker, your insurance is there for you. The other person's insurance is there for them. So they're going to be less likely to give you money right away. And oftentimes it's on a different liability is paid out on a depreciated value, where in most cases your own insurance can have a replacement value associated with it for property damage, as opposed to auto damage, which would be typically done at an actual cash value basis, not a replacement basis. So I know I talked in a few circles there, but the answer is yes, no, maybe. We want to make sure that depending on the situation, we're going to provide you with different advice.
Yeah, that makes total sense. It's not
Cool.
everything's the same. You wouldn't have the same answer for everything. Because
Never. I'm
never.
trained by lawyers, although I'm not a lawyer.
Maybe that'll be your next grow up. What you want to be when you grow up.
Maybe when I grow up.
Maybe when I grow up.
All right.
So what is a good bundle to start off with? Now, I know that hopefully a lot of my friends will watch this, and I'm sure that they do not know what you feel like, you graduate, you get thrown into the real world, and some jobs it comes with insurance, some jobs don't come with insurance, but also, can you get insurance? I guess I'm asking you two questions at the same time. Can you get insurance on top of insurance provided by your job? Is that a smart thing to do? What's a good bundle to kind of start off with? What are the basics that, we hear about auto? What is too early to get life insurance? I'm throwing so
You're
many
asking
questions
like
at you.
9 different questions here, Abby.
I know.
All right. So we'll go with the job thing, like really super simple, right? If you get a job and they offer you medical benefits, great, take them. Move on with yourself. That's not our expertise, although we have people that we refer to that are experts in that. That's one thing, right? Life insurance is sometimes offered by an employer, especially in larger corporations. They have life insurance group policies for life insurance, which are great, but they're inexpensive. They're what's called an annually renewable contract. So every year you're going to pay into it, but it's not portable. It doesn't get to go with you, right? So you look at somebody, and this doesn't happen nowadays anyway, somebody that's been in their career for 30 plus years, and they've had insurance through their job for their life insurance, and then all of a sudden they're unemployed. That life insurance is no longer portable. In that 30 years, they had a pacemaker put in, they're on high blood pressure medication, they're on other shit, and then the insurance gets to be ridiculously expensive. So we always recommend layering. Take the employer benefit because it's inexpensive and that's a good base layer, but you always want to purchase something on your own. And typically that's going to be a term life policy, regardless of whether you have a spouse or dependents. Having that base life insurance is going to be good for you just to have in general as your life needs change. And then you can continue to grow with it. Now, when you're young, right, when you're in your 20s, I love people that purchase permanent life insurance products because they're so inexpensive. It almost acts as a little bit of a forced savings because there is growth in there. There's monetary growth. The likelihood of death in your 20s is very low. And obviously it increases as you get older, right? So we want to purchase that insurance at a very young age, and it's going to really help you accumulate some life insurance and a little bit of wealth over time. We don't like to call it a savings vehicle, but it kind of is there for that, right? So you asked that life insurance question. We got the health insurance, the life insurance. Then you went into bundles of television commercials, watching cavemen and animals and a gecko. What kind of God? I'm so bad. It's a serpent. What is it? I don't even know. Anyway. And then our progressive lady, right? Flo, right? Selling bundles, and State Farm and Allstate, right? Everybody wants you to bundle, right? They want you to bundle because 1, they want to control your insurance, and 2, they're going to offer you a discount to control your insurance. Now, we can do the bundles. We have many carriers here in the office that can set up a bundle. And again, for the same reasons. 1, yes, we can put a discount on the policy if we can bundle. 2, if you have your home and auto and umbrella and multiple policies in one place, guess what? You get to make one phone call and have one agent through our office that can really help you navigate, through the policies and understand what you have. So you have one point of contact, I think is super important. And then 2, sometimes if you have home and auto and umbrella and an incident occurs at your home, which also damages your vehicle, I've had it happen personally, so I know, you can get through with a single deductible. So there's another benefit to it. So there's really 3 good benefits to bundling. 1 is saving money. 2 is one point of contact and sometimes a single adjuster. And 3 is savings on that deductible should a situation arise, right? So bundling is definitely valuable if we can make it work. Doesn't always work, but we have some companion discounts that we can throw on to auto and home policies to do the best that we can to create that bundle and keep us right, as your main point of contact.
Awesome. One point of contact is way
Cool.
easier than having 7 points of contact.
Exactly.
So what is the difference between premiums and deductibles? I know they're probably very different, but they get thrown around. I feel like they get thrown around the same sentence a lot.
Okay. That's fair. So, your insurance premium is the price of the insurance policy, right? So take it another step further, the cost of insurance is not necessarily the premium. The premium is what's on the bill, right? That's what you're going to pay every year. Call it home, auto, business insurance. The cost of insurance has different rating factors that go into it, and everybody's premium is going to be different. And there's going to be different cost levels that go into creating insurance, right? If you have higher limits, you have broader coverage, and you have better coverage, your cost of insurance is going to go up, which obviously makes the premium go up. So there's different cost factors in premiums. Deductible is what you're going to be responsible for out of pocket, right? We'll call that your risk tolerance. If you have a higher risk tolerance, you're going to have a higher deductible and be responsible for more out of pocket expenses, or not put claims in that are low dollar value. I personally keep pretty high deductibles. I don't want to put claims in there. I want to keep insurance for the catastrophic, for larger events that may occur. So I like having $2,500 and $5,000 deductibles wherever I can. I don't mind paying that first $5,000. It's painful, it's annoying, but we're going to do it whenever we can. So the deductible is your risk tolerance, your risk that you're taking on, and your responsibility, so that if everybody had a $0 deductible, there'd be claims filed for $100 all over the place, and it'd just be a total mess.
Makes sense. Makes sense. So are insurance companies evil?
I knew you were going to ask me that. Who thinks insurance companies are evil? Like, is that a thing people are putting into the internet? They're
I
asking
haven't
that?
seen it. I haven't seen it trending on Twitter in a while, so I think we're okay for now.
All right, listen. So everybody thinks insurance companies are evil, and we're in a weird time right now. We've got a lot of storms. The natural disasters the last 5 years, 10 years have been growing and are off the charts. We're in New Jersey right now. We're not in California, Louisiana, or Florida, where things are even worse. Florida just approved a 63% rate increase on their homeowners insurance marketplace. Louisiana, 63%. California, it's almost impossible to find insurance. You have to be in a state plan there as well. So things are challenging in our environment right now. And we've been seeing this hard market since 2019. So it's gotten difficult, right? So when costs go up, when premiums go up, people think the insurance companies are just putting money in their pockets. At the end of the day, the insurance companies run on about a 4%, sometimes less profit margin, right? So they're not taking all this money. They're paying out a lot of money at the end of the day because of these natural disasters, which is then causing the reinsurance market to go up, right? The cost of reinsurance for the insurance companies is also increasing with it. So are insurance companies evil? The answer is, yes, no, maybe, right? You want to understand the contract that you're purchasing, and you're covered for the coverage that's provided to you in that contract. A homeowner's policy is 42 pages long. Some business insurance policies are well over 100 pages long. A lot of that is exclusions, right? What's included, what's excluded, what has sublimits or limitations on it for coverage, and what has other requirements in order to trigger coverage is also what's written into these insurance policies. So when an insurance company declines a claim, yes, they're evil to you, that person who got denied, because you didn't understand or you did not purchase the appropriate insurance. So I can see it both ways, man. If somebody's upset, insurance companies are evil. When you get that claim paid, get it paid appropriately in an appropriate amount of time, they're there to help you, right? So they are there to help you. They are banks. They are profit centers. They are there to make a lot of money for their shareholders and their boards and support a ton of employees, right? Multi-trillion-dollar industry with hundreds of thousands of employees around the globe that work in insurance. So I'm going to go with the no. Insurance companies are not evil.
Okay.
They can be, but they're just not.
But they're just not in the core. So now I know some of these benefits because I work for you and I work here.
Good.
But what would you say the advantages are of working with LG versus trying to, figure this all out on your own and just reach out to the insurance companies themselves?
I mean, listen, we're all on the Google machine all the time, right? And there's a lot of different technology in the marketplace for insurance. We have some technology on our website where a small business owner can go get their own quote. If they're a gig economy worker, you can get your own quote right on our website through Thimble. If you're hosting an event, you can get your own quote, right? There's certain things that we want to try and automate and help people in the automated digital economy get situated with. But our true value is our availability, right? I don't want to make it up. We're selling insurance products. We're very good at it. We know what we're talking about, but being accessible and available, I think, is one of the most important things in business. And I tell everybody on the team, if we're not picking up the phone and having difficult conversations and good conversations, then we're not going to be successful, right? If the phone rings and we're not answering it, we're just being status quo at that point. So it's up to us to make sure we're answering these questions for our clients, our customers, our friends, our family, and helping them when difficult times arise, and making sure that we have the correct insurance policies in place to make good, strong, solid recommendations for good coverage, and do it at the right price, right? I always tell everybody, I'm not going to be the cheapest, and I'm going to be lazy because we want to do it right the first time, right? So to me, that's super simple. Let's do it right the first time, and then we don't really have to worry about it till the renewal, and sometimes for a couple of years, because we've set things up into a strong program that will be super pretty good with it. Super pretty good. I like that. That's almost like a supercalifragilisticexpialidocious. Super pretty good.
Yes, Mary Poppins. That is true.
That's L. Like, she loves that. We listen to supercalifragilisticexpialidocious all the time. Like, I can almost spell it, but I'm not.
Yeah, because this isn't in the spelling bee. Not today. Not yet.
That'll be on the Mary Poppins pod.
Mary Poppins podcast.
Maybe my kid should start her own podcast.
You should. You should have her on.
Right? Oh my gosh.
Yeah.
It's so much fun.
People aren't going to want to watch us. They don't
want to watch this. They totally want to watch a 7-year-old talking about Mary Poppins and Annie and all the other cool stuff that she does.
Because she is cooler than us. That is true.
Totally. All right. What's next? We got AB.
Next? What is material misrepresentation?
Oh, wow.
Oh. We're picking up the vocab.
Material misrepresentation is a phrase that you never want to see written in a letter to you from the insurance company, or to hear from your attorney or anybody else. Like, talk about a difficult conversation. It means that somebody didn't tell the truth on their insurance application, right, for our purposes. And the insurance company then says, hey, because you didn't tell the truth on the application, and we have it in writing that if you don't tell the truth on your application, we can cancel your insurance policy retroactively and return your premium to you. They can do just that. So being upfront, truthful, honest about the operations, how you operate your personal vehicles, who drives your vehicles, who lives in your home, do you have a trampoline, do you have a dog, what kind of business are you operating, are your sales correct? Doing all these things is prudent to making sure you're not going to be canceled when you actually need the insurance to kick in. Paying the correct premium is unfortunately part of the process. Insurance fraud counts for hundreds of billions of dollars in costs to the insurance companies every year, right? Because of these misrepresentations. So sometimes the evil insurance companies have to fight back and defend themselves. So, upfront, open, honest, truthful on your applications is going to lead to success, whether you like the premium or not. Sometimes you got to eat it. And then we got to look at other avenues. All right, how do we get the premium down, right? What can we do to get the premium down? Are we going to reduce coverage? Are we going to increase deductibles? Or are we going to create a loss control and safety program for your business that's going to keep you from putting in claims? Can do that. That was a good one. I like that. Thanks.
Thank you. Now, I'll leave you off with a big one, because I want to make sure that, we have enough material for this next episode. If, this goes well, I love my job, so I hope it does. But so we've heard rumors about, the market to buy a house is about to, become a little bit better, supposedly, than it's been in the last few years. So what would you say that first, time home buyers need to know about homeowners insurance coverage besides to call us?
Right. Besides calling us, right? So when you call us, it's our job to make sure that we set you up with a good insurance program, right? We want to offer that value word, right? We want to put a good value policy in place. We're going to look at that home inspection, look for things that the insurance companies are going to look at when they come out and do their inspections, right? So we're going to look at, the square footage of the home, how you're going to use the home, and we're going to make sure that you have proper dwelling coverage on the house, proper replacement cost language, right? There's different definitions of replacement cost, whether it's ACV, functional replacement cost, guaranteed replacement cost. There'll be a blog link to go check out all of that after the fact for sure. But making sure you have that on your contents as well. The roof, right? Some insurance companies, and you don't know this, put an actual cash value valuation for roof. So you're like, oh, I have roof damage, I need a new roof. Insurance company says, oh, guess what, your roof is 20 years old, here's $500, that's all you're getting, replacing your own roof on your own. And they didn't realize that they purchased cheap insurance that has poor language. Sometimes that language is required. If we know the roof is old and we've pre-disclosed and had those conversations, we'll set it up that way. But we want to make sure that you have that equipment breakdown coverage, personal injury protection, sewer line, right? I had a sewer line break at my last house, not too long ago, cost me $5,000. And guess what? I got 4,500 back from the insurance company because I had the service line coverage in there, like super important. We've seen that service line claim happen more often than we see any other claim in a household. So just making sure you have the correct endorsements, the correct coverage, and the correct usage on there. And also depending on the occupants, do you have a pool, trampoline, however things work out for the home, are all going to be important. And that's how we kind of also separate ourselves, is to make sure that we set you up correctly and do it right the first time.
Actually, I lied. I'm gonna ask you one more question.
Okay, fine. Be that
So
way.
say, say that someone, they buy a house, they get maybe not the best homeowners insurance off the bat, just to, get the house closed. They want the house. Can they come to us? Like, can you break a policy? You
Yes.
can.
Yes. Yeah. Listen, if you made a mistake, we won't hold it against you. We want to see whatever we can do. And sometimes people buy things spur of the moment and don't understand what they're buying and don't take the time to meet with a professional, whether it's us or another good, strong, independent agent, right? To have the conversation around coverage, what's included, what's not included, what's excluded, what are my deductibles? Are there different deductibles for different things? Right. So having that conversation is important, and we're not really going to hold it against somebody. So yeah, homeowners insurance, auto insurance, those can all be canceled. But at the same time, you only want to get away with doing that once, because policy continuation is also another credit that eventually you start reaping the rewards from being with the same insurance carrier for multiple years, is going to eventually, it does help you because you'll get credits for longevity from some insurance companies. So we're happy to help whomever we can help. I mean, as long as it makes sense for us and it makes sense for the consumer at the same time, we'll be able to help put a package together.
Sounds awesome.
Awesome.
Well, Aaron, I think that's it for today.
You're done with my brain for the right now?
I think so.
I can go back to work.
You can go back to work. So can I.
All right.
Which will be this.
Abby, this is awesome. Thanks.
Yeah, let's do it again.
All right. Bye.
See you in a little. Bye.